What's up? Good morning, good morning, good morning. Buenos dias. ¿Cómo está, everyone? What's going on? So here we are. Markets, I don't know, they decide to go back up, they go down. Nobody knows. Only the shadow knows what's going on. And it's been a challenging period from almost any phase that you would look at. Again, you can figure out or make the reasons up that you want. I would suggest to you that it doesn't really matter. It's always about what you see right here in any chart that you watch. Again, you can see, and the charts themselves tell a story. But I think the bigger story, and I think one that everybody needs to always recognize, is when conditions are tough, they're tough, and it means what? If market conditions are tough, what does that mean to you? Or what should that mean to you? Let me put it that way. And this is just a pregame. We're not starting until high noon, but you know me, I like to come and hang out and BS for a while. So, but what do tough conditions mean to you? Or what should they mean to you? What's up? Yeah. Anybody want to chime in? Part of learning is participation. You know what I mean? And so, again, when conditions get nasty like they are now, you pull the reins in a little bit. When you're in your active trading, it shouldn't be so active. Those of you in Day Trader's Dream know, yeah, we had a bad week. Yeah, but it was a losing week. But again, we didn't trade much because there's not much there. In knowing that, if you're trading on your own, then you have to make sure that you don't fire things in when there is an opportunity. For those of you who day trade live with me every morning, we've made very few trades in the last, couple of weeks, a couple of months. Really, it's been a challenging market, which means that you need to become more conservative and less aggressive. Okay. And I will give you, when I believe the green light to be there for aggressive trading, I will tell you that I believe it's time. But I will also tell you that right now, many times, if I didn't have to be around to answer questions or do things, I'd be on the golf course, because there's no reason to sit in front of a mirage. You start to see things that don't exist. And what starts to play in? What's up, Nick? What starts to play in? I say, Ash, what starts to play in when you watch a chart long enough or a market long enough? You start to see a mirage. Okay, you start to let your opinion play out. Now, I have a pretty damn good opinion. I will say that. However, I don't use my opinion to trade with. I use my models to use, because I know that those are going to be huge winners over time. Okay, they'll go through drawdowns. I mean, listen, I don't hide from, as you know, I hide from nothing. Okay, I tell the truth all the time about what we're doing, because that's why I send out the results every week. Okay, but if you stare too long at something, you're going to start to let your opinion sneak in. And whether your opinion is your own opinion or one that you picked up from the asshole pundits on TV, which are all stupid. Okay. Again, remember, the guys on TV, half the pundits themselves don't understand markets to begin with. They're just faces. Okay. And everybody but me does not trade their own money. Okay. They raise money to trade in a fund. I don't raise money. I trade my own money. Okay. I have never traded anybody else's money. Okay. So again, you start to see things that don't exist, and they come from these opinions that you either form on your own, or you form from the information that you've gathered from either the Wall Street Journal, the TV, whatever it is, and you formulate an opinion, which is 99% of the time going to be wrong. Okay. And so, I mean, I can look at this chart right here. Here's the S&P 500. Now, I know what our position is, but I could make any case I want. I could make a case for it to go higher. I could make a case for it to go lower. Okay, but I don't want to make a case. See, our job isn't to make a case for what's going to go. Our job is to follow the price action and let the price action dictate where it's going to go. Okay. That's what our focus should always be, is the price action. I'm still short. Why do you keep asking me? We're still short gold and silver. You will know the day we reverse. I thought you said to me you couldn't be involved with me if I was short metals. Well, I'm short gold and silver, and I think they're going a lot lower. How's that? Now, it has nothing to do with my physical position. I own physical metals, so I'm really net flat. But right now they're going down. The trend is lower. Quit asking. You ask me every day. I don't care. Okay, it is what it is. All right, that's what I'm long the equities. I don't really want to be long equities either, but I am, because again, I'm following the price action. Okay. You could make either case you want here. You could call this support, okay, or you could call this resistance. Again, this is why you need to let the price action play out. And quite frankly, on a 5-day chart, okay, that's a pretty narrow range in the S&P 500. I mean, you're only talking about a 100-point range, which is how much? Less than 2.5%. So you want to get away from creating a view because you formulated an opinion. You know, it's no different than sports betting or any form of gambling that you're picking a side, because more often than not, the opinion that you formulated is by information you have gathered by listening to others. Okay. And that's usually not the best benchmark to move forward. It's just, listen, if you ever bet horses, if you read a racing form, okay, you're trying to look and see the form from before to see if that horse can run the form. You're looking at the market, the form of what it's forming and what it is telling you. Okay. And that again changes by the time frame, it changes by what's going on, and depending on what your duration is going to be. So right now we're long everything, okay, which does not make me happy. But again, I'm not meant to be happy. I trade them as they are because I know that it works. Okay, I know that it works over time. I know that it makes lots of money over time, but it does not mean there is not lots of grief in between. Okay. And, you know, the big portion of your time you spent doing nothing anyways. So you might as well learn that under very excruciating circumstances in markets, which are slow, that maybe it's good not to get too involved. And if you don't have to be there, maybe you should do something else. That's what I tell everybody. Does the trader's dream? No, it does not trade 24 hours. It trades only the pit hours. Okay. The day trader's dream only trades pit hours only, the original pit hours, which are obviously there's no more pits. We're not getting involved in that overnight. First of all, you'd have to have somebody stay up all night and watch it. That's number one. But number two, we're not getting involved in that thin trade. It's tough enough to thin trade during the day, let alone at night, when all of a sudden you got a market that's trading 200 contracts, then you get 5,000. Bang. No. I would never let anybody trade in those conditions overnight. Okay. Unless it's really busy. Okay. Unless there's a reason, like during Brexit. Okay. Sometimes during the elections, where there could be some real activity. You have to have it's called paper. There has to be order flow to want to participate in a market. Okay. Without it, you can't make any money anyways. So you're better off not trading. The only thing I would ever do for anybody at night and recommend at night, if you had a position on that you were looking to exit at a certain price point for profit, then you can work that order overnight because you don't mind that. You never mind buying or selling something that you own into a illiquid market or a quiet market, because you're closing the position and you're realizing gain. Okay. But I would never initiate, well, let's say not never, but very rarely will I initiate new trades in the overnight market because they're just too thin. But I do use them if I'm trying to exit something or take profit somewhere. Okay. But none of my models will ever be active overnight. They may have positions overnight, okay, like our regular portfolios, but we will never actively trade overnight because you just can't, you can't do it. You'll get killed over time. Okay. So again, but if you look at this, you can make any case you want. You can say, oh, well, the trend is starting to turn higher. Okay. Well, actually it is based on our algorithm, but I could also make the other side too. And again, that's why I try not to use an opinion. That is why the algorithm was designed the way it is designed. And again, this goes back to my floor trading days. Okay. It's not to try to figure out what the market's going to do, but let the market tell you what it wants to do. And that used to be determined for me through order flow. Okay. On the trading floor. That's when I was right in the battle of it all. I could see the orders, I could hear the orders, and I could see what was happening. So I was actually reading the price action without a chart. Okay. But again, that's how you learn to trade. So again, but right now we have a market that is so painstakingly slow, okay, that it makes it more of a challenge. So when markets are more of a challenge, what does that mean to you? It means that you need to pull your reins in. Okay. Remember, there's a lot of money can be made trading. Okay. However, the lot of money that can be made trading has to be done with a great deal of discipline to not get involved when you're not in an advantageous spot. Okay. Because too many of us think that over here, let's trade. That's not the case. And then some of you are here, I can see already, that trade with me every day. And what do I say every day? Okay. Chart reading is just an opinion. Well, no, chart reading, if you're looking at it objectively, okay, it's not an opinion, it's a probability. Okay, if you're looking at it objectively. Again, I often wonder if who looks at it really objectively. Okay, I do. I look at them very objectively, and I will tell you exactly what I think. And again, nothing is going to guarantee 100% results. Okay, all you can do is put the probability in your favor. Okay, that is the only thing you can hope to do, is create a high probability situation that will allow you to make money. Okay, more often than not. And again, at the rate we would like to make money would be 66% or more. But our day trading in the morning, look, we've made very few trades, but we've made money almost every day. And again, it really just depends on a certain product that you're trading, because there's, we trade a number of different ones, and not everybody trades everything. But overall, it's been fine. And the losses are small. Why? Because again, we're using very strict disciplines to trade. As you'll see when we get into the actual presentation, discipline is a big part of trading. Okay. The mental side of the box, and these are all things we'll talk about a little later, but these are things that play every day. Okay. Which is again, why I say to many of you, go to the pool, go to the beach, go play tennis, go golfing, go to lunch, go to take a nap. There's nothing to see here. Sometimes there's just nothing to see. And if you're waiting for that one trade, like you think is going to make a difference, you're making a mistake. Okay. The more you expose yourself and give your opportunities to do something stupid, you're going to do it. It's human nature. Okay. And that's what I try to share with you all the time. Human nature is what drives markets anyways. You have to be above that. Okay. You have to be above the forcing yourself into a trade that you have no control over anyways. Okay. So why force yourself into a situation that you can't really control the outcome anyways? You can make assumptions based on probability and set yourself up to be in the highest position. But if you play poker, aces over kings, just because you have pocket aces over pocket kings doesn't mean you're going to win. You may have the advantage going in. You're a 4-1 favorite, but it doesn't mean you're going to win. And that's what you have to remember, which brings in the discipline and the money management that go along with everything. Okay. Because, this morning I did my options call and we're talking about volatility. And I go, you have to know not only what direction you suspect this is going to go, but what the right trade to put on for the direction that you think it's going to go. You know, it's just not as simple as buying a call or buying a put. Call buyers and put buyers naked have zero chance to make money over time, especially in today's world. You know, 30 years ago, you had a shot, but not anymore. So again, you have to understand what kind of position you're going to use to create what the end result is going to be. Okay. Now, obviously, the best model for being active is futures. Why? Because they're the most liquid markets, because they're the least amount of money to control. And they don't have that stupid ass FINRA day trading rule. Okay. So you can trade, you can do a lot more with a lot less. Okay. But again, you have to define, you know, what you're looking to get. Okay. But don't turn a chart into a mirage because you have an opinion. Okay. I mean, you know, here's the NASDAQ. Now, we just turned long the NASDAQ yesterday. I think it's going lower. Okay. Listen, I'm long, but I think it's going to get crushed. Okay. I think this is just going to be like the tech wreck of 01. That's my opinion. But my opinion doesn't trade. My opinion just talks on TV and talks to you guys. But with the disclaimer that I'm not making that trade based on that. And I will trade whichever side the market gives me, depending on the time frame I'm trading. Now, many of you don't know this, but you know, every morning at 9:30 to 10:30, we trade live. Actually, I come in about 9, but at 9:30 to 10:30, and we're trading these 8 markets on 4-minute charts. Okay. So, you know, again, so there for me, a long-term capital gain is 4 minutes. So it depends on the time frame that I'm looking at, and whatever the market tells me is what I'm going to do. Now, I did not make this trade, so I don't want to, you know, again, I don't tell you about trades I did not make, but this was a potential. Okay. This was a potential buy. Now, I did not. And like I said, I never want you to think, I'm never going to tell you something that I didn't do for fact. Okay. But those are potential opportunities that show up. And again, we're looking for certain patterns when we trade that way. But again, if the trades don't come, the trades don't come. I can't force a trade to be there. Okay. So you have to remember that, again, this takes the art of planning, disciplines that go along with money management. Okay. Because, you know, you can be the greatest in the world, but if you don't manage your money properly, you're just another bus stop that passed along. You know, I mean, think about it. I mean, you know, I've seen on the trading floor alone, I saw probably 5,000 traders come and go. Okay. Think about that. So, you know, what is the common mistake or the common flaw in those people? They have no disciplines. I was waiting for NASDAQ to show some strength. That's right before I switched along. It never did, so I did not. So, well, that's up to you. Again, I have. Oh, you did it at the end of the day. Okay, look, that's fine. You do as you. Like I always say, it's your money. You do as you wish, but I'm not going to. You've proven to me that you're not necessarily always following, which is okay. But don't come crying when I say we did action. You didn't do that. That's all. Look. I can never tell everybody what to do. I can only make my recommendations based on what we do all the time. Okay. I do not ever, you know, I can't make you do it. Okay. I can only give you what I give you. Okay. But again, you know, more often than not, those who do things like that come with their tail between their legs, crying their eyes out that they made a mistake. And it's not a mistake. You chose not to make the trade. I've seen this. What do you think? You're the first one that ever said that to me? I know all about it. If you can give me an excuse I've never heard or tell me something I've never heard, I'll give you 1,000. Okay. Because I've heard them all. I've probably done most of them myself. You know, what do you think? I just got off the boat. I made many bad trades over the years. I take plenty of shots over the years, which is no good, but I did anyways. Okay. So, you know, but again, so everything depends back to the time frame that you're trading. Okay. Because what I'm trading on a daily chart might be completely different during the day. Okay. And, again, if you're trading 2 minutes, 4 minutes, 8 minutes, 10, 12, every trend can be different. You have to recognize that the markets, if you change the time frames, okay, and you look at them on different frames, there's 3 minutes, pretty flat, pretty much in consolidation, right? Okay, if I go to 15 minutes, it don't look so good. Looks like it's trending lower. Okay, if I go to an hour, back into consolidation, and if I go into 4 hours, half a day, now it looks like it's breaking out to the upside. Okay, and then of course I go back to daily. Okay, this is the wishy-washy answer, but it looks like we are long, so it does look like it could be making the bottom. Okay, and if I go longer, okay, well, it looks like it's still going down. Okay, now again, what is the determining factor? Well, again, it's the time frame then in which you're watching. And the reason that we trade the shorter time frames during the morning is because we want to have, we want the most amount of opportunities that can be created in a day trading model. Okay, so everything is based on time and how long your anticipation is that you're going to hold a position. Okay, like my equity positions, I hold forever. Unless something changes dramatically. Okay, I hedge them and hold them forever. I don't sell anything out. Okay, I keep it because it's hedged, so I don't really care, and I want to accumulate. That's okay. It's okay. It's no problem, Nick. I'm not, like I said, I always have to give the disclaimer. Okay, I know what goes on. I'm not. What's up? Okay, so again, you have to understand that everything is based on the time that you're choosing and how active you want to be. But there are times that even if you want to be active, you cannot be active because there's nothing to do. Don't make the mistake of trying to create a market where there is none. Okay, you're only chewing up yourself. And remember, making a trade is not just the money you make or lose on the individual trade. You get the VIG that goes along with that trade, right? You get commission on both sides as well. Okay, so don't trust me. The more you screw around in markets you don't belong in, okay, and times you don't belong in, you will lose more money over time, and you'll find out that everybody will make money, but you, all the expenses you pay to get there, when you shouldn't be trading anyways. Okay, you can never miss. I think we all have that fear of missing out type of mentality. Okay, I think if you would get rid of that, because what are you going to miss? One trade? How much are you going to make on one trade? Do yourself a favor someday. Walk back the math. Okay, on an active trade. Okay, and we're not talking about our portfolio models. We're talking about an active. You're trying to day trade. You're trading in 4 minutes with me. How much are you really going to make on a trade? Okay, and we've had trades that were as good as a couple $1,000 winners. Okay, but that's to the extreme. Okay, and we don't look for that. But if I miss the trade, so what? How much would I lose trying to find that trade in a market that didn't want me to trade it? Okay, think about it from that perspective. Again, you have to turn things back into, what am I going to miss if I miss, which is nothing? Okay, and does it really matter? And the answer is no, it doesn't matter. Because again, if you're really, too many people have a short view, like immediate gratification. This business is not about immediate gratification. It's about immediate failure, and it's about immediate getting screwed. Okay, because you're trying to force action where there is none. You're trying to make something exist that does not exist. Okay, and if you want to do that, then you shouldn't be here, and you should just go hand over your money to a charity, because you cannot fire into a market that has no action to begin with. Yeah, you can get lucky a couple times, but I assure you, the opportunity cost of getting lucky will crush you later. You have to have a reason and a purpose behind every trade, as well as have an objective of what the success can be. Okay, we don't trade just to trade. Okay, we have no intention of being overly active. I don't need the broker to make money if I'm not making money. Okay. I don't need to be in and out. What's the point? Okay. So, there are many times when you get into very narrow markets that it's easier to walk away. You don't need to pollute your mind with nonsense, because you know what the pundits are saying, and some are talking good. You listen to Peter Schiff and David Stockman, you want to hang yourself. Okay. Now those guys, if you listen to them for the last 12 years, you'd be broke 45 times already. Right? To those two guys, the world is ending every day. Okay. Yet here we are. So you got to remember, you do not get paid for overtraining. Is correct. You got to remember the source of what you're hearing if you're going to listen. Now, me personally, I listen to no news. Okay. I get all my news out of my chat room. Okay. I got people that post the results of things just because I don't care. I haven't watched a business network for 5 years at all. I didn't watch much before, but I haven't watched it all for 5 years. Yet I'm still on myself. I still go on and do media, but I give them my opinion. I don't give a crap what they say. They don't know what the hell they're talking about anyways. They're creating a different aura of what they want. Again, it's just like the risk on, risk off trade. You know why the risk on, risk off trade was created? Does anybody know why that was created? Anybody? Bueller? Okay. Nobody wants to chip in? Okay. It was created to keep your money in the market. That was the creation of that trade, not because it was good for you. It was created so that you stayed in the market, so that you could continue to pay the broker. Okay. Your advisor. They don't get paid when you're in cash. They get paid when you're in the market. Okay. That's what risk on, risk off. Do you think that anybody can determine the environment of whether it's risk on or risk off? And if it's risk on, you've all seen, well, maybe not all of you, but most of you have seen market meltdowns. Now, let me ask you the question straight up. Okay. In a market meltdown, is any asset class been ever safe that you've noticed? Okay. In a meltdown, have you ever seen any safe asset class? Okay, let me see how much you're paying attention. I'm going to mute myself because I got to blow my nose. I'm sorry. Excuse me for a minute, but I hope you can answer that question for me. Okay. So the answer is to keep you trading. The answer is that you don't need to be involved. There is no such thing because there's no safe asset class. When they're selling everything. When the margin calls start coming in, we've witnessed it the last few weeks, a couple of days. Every asset class across the board was done. Okay. Now, again, it's not a big deal if you understand what's going on and you're not going to panic out, because we know which asset classes will then bounce back. Okay. Like if equities are selling off, there's a higher probability that commodities will start going higher because that money has got to go somewhere. Okay. Money is going to always look for a home. And by the way, if you're just tuning in, I haven't started anything. This is just a pregame. Okay. I'm just moving around right now. When they sell them, they sell all. Right. Listen, you saw it. You saw it a couple weeks ago. Everything. I don't think there was one green item anywhere. Okay. So, there is, when there's a panic, everybody's selling everything. Okay. Either to get out or to raise money. One of the two. All right. And that's what you have to recognize about the markets. That's what too many don't pay attention to. Again, there is no safe asset class. The only safe asset class is if you're hedged. Okay. That's a fact. That's the safe asset class because at least you know your exposure. Okay. At least you know where you're protected to. Okay. Other than that, there is no safe asset class. Okay. Other than having a perfectly protected position on or a limited risk position on, other than that, you're exposed. Okay. And I'm not saying that we don't take exposure, but at the end of the day, if you think that risk on, risk off works, you better think again, because if we could pick risk on, risk off, we could never be wrong. We'd be hitting 100%. Okay. Think about it that way. Okay. Has anybody here hit 100%? Right. In 2008, the gold, everything crashed in 2008 because initially, remember, if you understand markets, okay, if you truly understand markets, the first thing to go is the first thing that happens is the big margin calls start to come in. So those who get the margin calls who don't have the money, they have a margin call already, so you already know they don't have the money. Okay, so what are they going to do? They're going to find an asset that might have been performing better and sell that to cover for their losses. Instead of closing the losing position, it's a piece of crap. They're going to get rid of a winner, which is obviously the worst strategy. They're going to dump out a winner, okay, to cover the margin to hold on to a loser. Think about that for a logic. Okay. Now, that's not very logical, is it? But that's what most people will do. You have to remember, okay, that you're here to make money. Whether you're investing, you're trading, you're doing both, you've got your IRA, whatever your reason you're in the market, it is there for one reason. You're there to make money, not to gamble. You want to gamble, go to a casino, go to Vegas. Okay, go to almost every state in the union now. I think 38 states have a casino. Okay, go to your local casino. You don't have to go far. You can get an app. Okay, you want to blow your brains out, do it elsewhere. When it comes to the markets, you want to put yourself in the best. It doesn't, listen, being in the best position does not guarantee success either, but at least you're at the highest probability that allows you that position to be in. Okay, that's what you got to remember. You have to set yourself up to be successful, and if you're gambling, you're setting yourself up for failure. Okay, and you're setting yourself up for many losses of opportunity costs over the years. Okay, that is it's really the typical investor, but I get your point. The typical trader, typical investor, dump the winner to protect the loser. Okay, which is ridiculous. It's totally the backwards way of thinking. Okay, it's a total backwards way of thinking, because if you understand trends, then trends assume to continue. Okay, and anyway, this is just a pregame. If you're just tuning in, don't worry, I haven't started yet. And if you want this recording, in fact, today I'm going to send them both, because you can all have a chance. This is just a quick Q&A, and there'll be some special pricing on some products if you want. But again, I'm really here to educate, which is my thing. I love to teach people that want to learn. Those are hard. Those are few and far between too now. People that actually want to learn and understand how this works. It's a shame. It's very sad. Okay, because we work so hard at other things, and you squeeze out pennies and dimes, at a restaurant, or how you spend. When it comes to your money, you're like a cowboy or cowgirl. I mean, it doesn't make a lot of sense to me, but that's the way it goes. The best teacher on the side of Pecos. What side of Pecos am I in? But again, it's again, there's many things. There's many landmines out in markets to trip you up. Okay, but you can avoid most of them. Okay, you can't avoid them all, but you can minimize. You can minimize the damage that they ever do if you're prepared for it. Okay, that's what you have to remember. This is not a game of luck or chance. It's a game of skill. Preparation is what it takes. Okay, study. And again, look, when I say study, I don't mean study every day, like we're in school, but the more time you spend learning your craft and understanding how a market actually functions. Do you realize that most people don't even understand how a market functions? That our kids are not taught any of this stuff, right? How markets function. Okay. Our leaders have no idea how markets work. Okay. They know when they got a problem, they call the Fed. Okay. To create money. Think about it that way. Okay. You have to learn, you have to understand not about the company, not about anything, but how the price action works with the market, and how to use the price action to your best favor. Again, nothing guarantees a successful result except time. If you are truly doing things properly, and you know what your win rate is. Okay, then you can make money all the time. Not all the time, but you can make money over time. Okay, but the Mavericks, the Cowgirls, Cowboys that fire out there, they make a lot, they lose a lot. They get hot and they fired up, and then they fired up, and then they lost some. Okay. In the meantime, they missed the entire point of the market structure and how it works. Okay. Whereas if you understood how everything works, you should never be surprised by what happens in markets. And why is that? Because in today's world, there is no news anymore. Do you think that jobs number was news? That jobs number was already priced in by all the big banks. They already knew what the number was, not because they got it illegally, because they pay people millions of dollars a year to take all the data that comes out building up to that number to create the number. Everybody knew what that number was already. Okay. This is not when I started 40 years ago where there was some legitimate news. Today's news, never a surprise. Okay. A fundamental news bomb is all that would have any effect on these markets. Okay. And we don't have many of those anymore either. Okay. Because the markets are very little affected at the moment. Okay. So that's what you have to remember. Okay. Again, you can look at this crap all you want. You can twist it in any direction you want. No, the algo is, again, you guys don't understand what high frequency trading is and what it really means. High frequency trading put me out of business. Okay. Because, you listen to those stupid ass pundits on TV. Did you ever hear them say, oh, the high frequency traders, when the market goes up 1,000, you ever hear them say, oh, the high frequency traders drove the market higher? You only hear about high frequency trading when the market goes low. Okay. What the high frequency algorithm trading did is it made your commissions a lot less. Every one of you owe them, the high frequency traders, a big hug and a kiss and a thank you, because they eliminated the market makers. They made the bid offer spreads as tight as they've ever been. Okay. Giving you a fair and square opportunity. Okay. And they destroyed they destroyed the trading floors, which brought your costs way down to execute. Okay. High frequency trading is a bunch of bullshit started by the media. Okay. To tell you that it only goes down, right? Oh yeah. High frequency traders only sell. They don't ever buy. They're just sellers. I mean, really think about it. And furthermore, the true high frequency traders are every one of you. All of you out there that panic at the same time and start hitting that sell button, okay, or buying the short button, okay, you're all doing it at the same time. Think about it, okay? That's high frequency trading. That's panic. It's got nothing to do with the algorithm that is scalping the bid offer spread for fractions of a penny on billions of transactions, okay? So no, it has nothing to change. Nothing has changed the price action. Okay. Yes, we've gotten slower. What's changed the price action is the lack of true data or shock and surprise, which is why implied volatility, although high right now compared to where it's been, is continue to come down year after year, because that has changed. Because the effect of items that can affect the market has changed. We don't get many, as I said, fundamental news bombs that change the markets, because everything is kind of priced in. It's hard to, a guy farts in Russia, they know about it in California in less than 10 seconds. So how can you get news? For any of you who remember the Bay of Pigs, that was going on 2 weeks before the American people knew about it. Did you know that? Nobody knew about it for 2 weeks because there was no flow of information like that. Okay. So anyways, all right, I'm going to stop this recording right now, and we're going to get ready for the main deal. Okay. And get started with our Q&A and whatever I got to say. So let me just stop this. Hold on. Bear with me for a second. Thank you, darling. And what's up? What's up, everybody? Welcome aboard. I know I'm a couple minutes early, so I kind of stammer and stutter here for a couple minutes, but it's interesting times in markets, obviously interesting times in the world, and lots of problems out there. We don't hear about the food shortage on the news. See, this is another problem. News is very directed into, what political party you affiliate with. Okay. And again, it doesn't matter. You got channels for everything. They're particularly dominated by the left. But again, I'm center, so I don't really care, and I don't watch. But overall, when's the last time you heard about the baby formula shortage every day? Okay, but let me ask you a question. If you're my age, you didn't get baby formula when you were a kid. There was no such thing as baby formula when I was growing up. Okay, I seem to make it fine. Okay, and most of you probably did too. I mean, is that our biggest concern, baby formula? Okay, but you hear about that every day because it's very sensational. Okay, you don't hear about the real food riots that are already going on around the globe. Okay, in the poor nations, because there is no food and it's going to get worse. You don't hear about that, do you? When's the last time you heard that, other than from me? Okay, so you have to understand that I said this a couple of weeks ago on my Bubba's Bottom Line. We're as free as the government allows us to be. Okay. So, anyways, I'm going to stall for 2 more minutes and then I'll get officially started. But it is taping, so that's a story. But there are so many things that go on that many of us are like robots and directed by whatever pushes your buttons. And that's taken away a lot of the free thought. And we have so much more bullying now because of all these platforms, these social media crap. I'd give anything to go back to no cell phones, no computers, straight up. Okay, kids go to the park all day. But anyways, that's just it's very frustrating as you see what goes on and the bullying that goes on through some of these social media networks. Very sad. But anyways, all right. So here we are. It's close enough. And what's up, everybody? Welcome aboard. And of course, every once in a while, I just get an itch to answer questions for everybody, kind of talk about general market conditions, and then also give you some, if you want. Again, there's no pitch here. I will give you some special pricing on any of our products at the end. If you're interested, if not, doesn't matter. Like I said, I'm here to teach anyways. It's always my pleasure to help teach people and hopefully get you in the right step, in the right phase, because of course it's really important that we put ourselves in the best position to be successful, because no matter how good you are, there's always going to be some times that are tougher than others. Okay, so as always, I have to sort of disclaimer, even though I'm not talking about anything specifically, there it is. Okay, I'm not showing you any results, but at the end of the day, you might as well see it. I might as well follow the letter of the law, right? Okay, but in the meanwhile, okay. So what are some of the problems? What are the problems before the real problems? How's that for a question? What are the problems before the real problems? Okay. Now, again, you can say what you wish, okay, but government expenditures, and that has nothing to do with just this administration. They've been blowing our brains out forever, okay, and continuing to kick the can down the road. Okay, good morning, Mark. Okay, Social Security. Look, I'm of Social Security age. I'm not taking it yet, but I'm gonna take it soon because I don't think it'll be there. But there's no reason that Social Security be at 65. Okay, it's dumb. All right, and that's not the design of a Ponzi scheme. The Ponzi scheme was to have people to live, to outlive and not ever collect Social Security, so that the ones who did live would be funded. Well, when your average living age is 78 and you start paying them at 65, it's kind of hard. Income is lower. You may be making more money dollar-wise, but you ain't making more money. Okay. The consumption, retirement funds, debt. We had another debt bubble. Nobody talks about that either. Okay. It's coming. And healthcare. That's before we talk about the monster inflation. Okay. The food shortage that's coming. Okay. So there's so many things going on that we don't even get half the story. All right. So you have to be prepared for all that, but you cannot allow that to interfere in the price action the markets tell you. Again, everything goes back to price action. Okay. And the price action is based on the time that you're going to trade it. And that's what you have to remember. Okay. Because that is where you're going to set yourself up for the best opportunity to be successful. Okay. Now, obviously, in this business, okay, you have drawdowns. And anybody who thinks you never draw down is just fooling themselves. You can listen to all the bullshit out there that the billion percents and the $300 make a million. That's so ridiculous. It's not. It's embarrassing that people actually fall for it. Okay, because I know one thing for sure in life: there ain't nothing for nothing. Okay, so in the meantime, just recognize that really drawdowns, like in Day Trader's Dream, we're in a small drawdown right now. To me, that's an opportunity. And if we were only plus, in one, we're plus 50, 60, 70%, one about 10. If we were plus more, I'd probably press right here. But in the meantime, drawdown is really an opportunity, not a detriment if you're taking the edge and know what you're doing. In the meantime, trading itself is the model you're using, but 80% of it or more is about what's in between your ears. Okay. That's the real facts. Okay. It's what's in between the ears that you have to deal with. Okay. From your discipline to your emotional money management to what your objective, and because most of you walk in without any objectives. You have no idea. You have no goals. You have nothing. You walk in, oh, I'm ready to trade. That isn't the way markets work, babe. You have to be, everything has got to be prepped and planned. Okay. Because when you're in business, which this is make no mistake, trading is a business. Okay. So if you're prepared for business, then you can make money. If you're not prepared, and many of you are entrepreneurs, and if you would just take the time to realize what it takes to put your business together and use that same theory and logic to put your trading together, because this is where everybody fails. The system is immaterial. I can make any system a winner. Okay, if I know what the win rate is, I can make anyone a winner. It doesn't really matter. But there's so many other factors that get there before you get there. Okay. Those who do not remember the past are condemned to repeat it. Now look, I think that we're repeating 08 again, 01, 08. That's what I think. Now, yeah, I could be wrong. But listen, in full disclosure, I'm wrong right now. Okay, so I have an opinion, but I'm not trading that opinion. But we certainly have to learn from the past, and certainly, much of the information we have is about what is happening out there right now, and we can ignore it, okay, or we can be prepared for it, okay, and obviously is why you should be hedged, because we know that the bottom is going to fall out of this. The market does not announce itself, and the bottom is going to come out at some point. Again, when? I have no idea. All of men's miseries derive from not being able to sit in a quiet room alone. And that's men and women. I want to be politically correct. Okay. But think about it for a minute. Okay. I always try to teach my kids, you got to learn to be yourself first. Before you can be anybody else, you got to learn to be by yourself. You got to learn to be able to take care of yourself under all circumstances. And when you're trading in a room by yourself, okay, just because you're watching doesn't mean you have to trade. Okay. You have to be able to sit in the room without doing anything. Okay. It's hard. It's a hard practice. Okay. And it's something that I want you to be aware of at all times. What I'm going to do here is I think I'm going to mix in. I always try to figure out what I want to do, how to do this best. So I'm going to mix in some of the questions. I go back and forth so we can get this all done together. And if you get more questions, I'll take them as well. I got nowhere to go. Okay. I've been to the Health Club already. I'm good shit. Quick day trader dream question for Saturday. Does the program use stops in the same ranges we do for day trading? And does the program roll up the stops the way we do it on the call? No, the stops are pre-designed by the algorithm. Okay. And what it does do is it takes the hourly signal is then uses a 30-minute stop to create the stop so that the windows are not so wide. Okay. And because they will move faster. Okay. So because we know we have a limited time and a limited window. So the answer is that the stops are predetermined by a 30-minute algorithm, which is immediately set and will be adjusted as it changes itself. Okay. One question regarding hedging, since you always are testing improvement to the strategy, I was just wondering if you've ever tested in other spread strategies like calendars, diagonal spreads, or butterfly could be an even better alternative to iron condors for the financing part. I do not agree with that. I think you're just trading. I have looked at it and I've weighed the time that it takes to make those trades, and if you're not a trader, the cost to make all those extra trades, and it is not logistically worth it. But certainly you can feel free to try it yourself. But I do not agree. Okay, I have tried, and believe me, I try everything myself first before I do anything. Especially diagonal spreads. Interesting. Well, they're interesting. I mean, diagonal spreads are nothing more than a condor over time. Okay, but it depends on the same thing, the collection of money over time. We go down to the shorter time frame to try to collect it now, and not have to deal with some of the misfortunes that can happen and being able to adjust it every week. But again, I'm not saying it won't work better. I'm saying that we've looked at it, and to me, again, I have to weigh all the steps into play, which is including margins and other thing involved. So for me, it's a no. But again, if you want to try it, feel free. Okay. The profits on, again, remember, bottom line is the iron condors done properly will net out between 6 to 10% annually. They'll be losing streaks and winning streaks. And then if you learn how to use them with the face of the markets, they will bring in a lot more cash. Okay. And they should bring in plus 20. Okay. But again, that's if you do it properly. And I can't vouch for everybody doing it properly. I teach it, but that doesn't mean you're going to do it. Okay. But again, I think it's better to adjust your iron condors based on the face of the market and versus doing other things. But again, feel free. Again, listen, I give you my way. I give you the way that I've studied the most and done the numbers on. And that's the answer I can give you. I can't give you something that I'm not sure or that I wouldn't care to do either way. Okay. Because the result would not be that much greater under any circumstance. How do I exit my weekly iron condors if both sides completely on Thursday for 20 cents is at okay? Yeah, listen, if you sold them correctly, and I don't know if you were doing $1 wide here or if you're doing $2 wide, but if you're taking your profit and you want to close the short side of the trade, anytime you can close the short side of a trade, of an option trade, with an overnight involved. Okay, not just on a Friday. On a Friday, I'm not so interested. Okay, because on a Friday, there's not much going to happen, right? There isn't going to be some major event, and most likely. Remember, if you understand that options work on a series of, what can happen over time. Well, obviously, every overnight is value. Okay, because when the markets are closed, who knows what can happen? So anytime you can close the short legs of an iron condor for less and lock in a total profit and give yourself a naked long option, go for it. Except on Friday. And Friday, I'm not interested because, again, I don't have the benefit of some major crazy announcement that's going to happen overnight. Okay. And the more overnight you got, the better off you're going to be. Okay. Will you run through the exact process of executing an automated self-hedge for a given stock, please, using the software on your site, assuming properly funded trader account? Can you explain the method for determining? I'll do that one later. Okay, that's a little bit more complicated. I don't read these ahead of time. I put them in, and if they're yelling at me, God bless, I don't care. I just post them. Okay. Trading ain't easy. Obstacles don't have to stop you. If you run into a wall, don't turn around and give up. Figure out a way how to climb it, go through it, or work around it. And if you're trading at all, that's part of it. Okay. If you're trading, you're going to run into things that aren't always. It's not always smooth sailing. Believe it or not. We're not stealing any money. Okay. And as I like to say, there ain't nobody handing out $100 bills. Okay. The secret to your financial success is inside yourself. If you become a critical thinker who takes no Wall Street fact on faith, that's what we talked about earlier, right? The pundits, all that bull. Okay. And you invest with patient confidence, you can take a steady advantage of even the worst bear markets. Again, think about that. Remember, your enemy is yourself. Okay. Your enemy, or what I like to call it, the enemy within. Okay. That's the battle. That's who you're fighting. with is the battle inside of you. Okay. Look, I've trained thousands of traders. Hell, I've trained hundreds that work for me alone. Back when the Bears and I were running our group down the floor, we had hundreds of guys over the years. So I get it. And I know the characteristics. And I'm telling you that if you can deal with the demons that run inside of you, you're putting yourself in a much more profitable and preferable position. Okay. Now, many of you are here that had demons before you got here. Okay. And we exercise those demons because, again, it's not about anything but raw. Not just you. Again, look, trust me, I got a pretty good read, right, on just about everything when I'm doing it. And if I'm talking to somebody, and I know who's panicking or who's doing what they're doing. I know what you're doing. If you're taking a shot, you're genuinely concerned. I get it. Did I not pick up the phone and call you though? 5 years ago or 6 years ago? Is that not correct? So again, it's the enemy inside, okay, is who you're dealing with. Okay. And you have to exercise that away. Look, nobody's gonna be perfect. And they're gonna show up, but it's your ability to keep them away as much as you can. Okay. All right, let's go back to a couple more questions. I'm kind of bouncing around, right? So where's Mitch Miller? I got to remember to go back to this one because it's too long to go through right now. Thanks, Beer. Here's my question. Can you explain the 50-80? I've heard you reference in options trading. Actually, it's 80-50, not 50-80. It's 80-50, not 50-80, but yeah, I'll explain it. Okay. So we use in option trading, there are certain little tricks to use, okay, that you can save yourself lots of money by giving up a very little bit of an edge over time. Okay. And what we do is we call that the 80-50 delta rule. Okay. And what that means is if I have an option that I own, okay, like, so let's say I want to be, let's go to the spider. So it's just, there's more liquidity, there's more options to deal with. Okay. So let's just say that I'm in the spiders and I got, I have a long position on. Okay. Now I would never do it naked, but for our example today, so I got a long position on, and for Friday, June 10th, okay, the market opens up on Monday. I own, let's say I own the, I own the 405 calls, let's say, okay. They're at a 65 delta, trading at 890. Okay. So let's say the market opens up, let's say at 415. Well, these will probably be at about 80 deltas, which is what I'm watching for. I'm looking for this to come to 80. And what I'm going to do is I'm going to take that 80 delta option. Okay. And I get you the real 80 delta option right now. Let me just open up a few more windows here so I can get it for you. There you go. So the 397 for Friday is the 80 delta. So if I sell the 80, so I'm going to sell a vertical basically. Okay. And I'm going to buy I'm going to sell my long 397, but I don't want to get out of the market. I like being long, but I want to cut the risk. So I'm going to buy the 411, which is at the money, a 50 delta. So what I'm doing here is I'm effectively taking $1,000 out of the market. Okay. And staying long the market. Okay. And creating a position. And yes, I give up a small edge, but how many times have you seen it make a big move from 397 to 411 and then go back down to 400 before going up higher again? So there's always a price to pay, but to me, the price is to have the money in your pocket and not worry about it because you're still participating just at a lower rate for the time being. But one of the things you have to remember also is as the clock winds, like for the 80 delta option for Friday, next Friday is the 397. My guess is for Wednesday, it's probably the 404, something like that would be my guess. And I was a little off. It's the 400, but that's close. See that they're all squinched together. So again, as gamma collapses, the delta picks up because again, the certainty of where they're going to close becomes more into it. So you end up with, but you roll 80 to 50 so you can capture some of the cash and not regret not closing a position So it's allowing you to stay in the position. At the same time, you're also taking some money off the table. Self-accountability is missing. And as amateurs, without self-reflection, analysis of trade errors, yes, it is. That's why I harp on it so much. Huh. That's why I'm such a nag. Okay. When do you think Bitcoin is going to reverse? Now, I don't know. I mean, look, if you know me, you've listened to me in the past, you know that I own Bitcoin in a wallet or whatever, whatever you call it, that I'm never selling. If it goes to zero, it goes to zero. I have made a commitment of X amount of dollars that I won't lose any sleep. I'll care, but I won't lose any sleep over it if I lose it. And as far as our portfolios, I don't know, but I don't care. Okay, again, I could care less when things are going to change. All I'm watching is what? I'm watching the price action of the market. Okay. And if I put a Bitcoin, I mean, we've been short this since, I don't know, 50,000, 60,000. Okay. And I don't see any reason to see it change. And when it changes, I mean, certainly I can make a case that it's coming close to the bottom, but I don't really care. And you shouldn't care either. My point is you shouldn't care. What does it matter when it's going to reverse? What are you going to do? Okay. You're going to have a party or you're going to celebrate? Forget about it. Just let it train. When it changes, it changes. Okay. On the hedging software, what should the preferences be? Well, they're different for many different stocks, which is why we allow you to open under the same account many different portfolios. But on the, let's say the major indexes, which is the easy one to talk about, 3% roll down, 5% roll up. Okay. Other stocks have to be decided on an individual case. There is not an exact, you're not going to use 3% on a stock that's $15. Okay. You'd be rolling every 5 minutes. Okay. So again, you have to, each is a case by case, and that's more of a question for the next hedging class, which starts on Tuesday, by the way. Okay. Let's see, what's this one? Let's get this last one here, and I'll go back and I'll come back later. Good morning. Hope you have a blessed morning. Thank you. I've been playing around with trading deep in the money options and earnings. I know that you do like to do these blogs, but never heard anything about on earnings. Tell me what you think of the trade below the report Tuesday. Well, again, I have made comments on this specifically, this type of trade specific. And every Monday night, I do comment that if the trade exceeds its expectations, every option, if you don't know options, there's an implied volatility, which implies how big are going to move. And when it comes to earnings, the implications are always bigger. And I always say on Mondays, if it moves more than what they implied in either direction, I'm taking the opposite side. I don't care, as a trade, not as in a long-term investment, as a trade. Okay. So this trade, what this person was doing here, okay, is they were buying the 200 call at the time. Okay. That's what that trade represents. And that's when I say to you, you have to have different strategies, and buying a straight call or buying a straight put are not one of them. Okay. If you're doing that, you're probably losing money and will continue to do so. You cannot buy straight options as a rule. You will go bust. You'll never be able to overcome, especially in high volatility markets. You have to figure out a way to create trades, and selling that spread would have been fine. I don't know how it turned out. Okay. But again, thinking it found a bottom, I don't like that terminology. Okay. I don't think you should ever think it found a bottom. I think you're making a dramatic mistake when you do so. Okay. I think that you're using your opinion. Now, as it turns out, you were right. Okay. And I'm not mad that you were right. I'm happy for it. But, this is in a downtrend. And I got news for you. If I traded this, which I don't, I'd probably be selling it. Okay. Because to me, it looks like it's going a lot lower. So you caught a nice break and you got lucky, which is fine. But again, your position had very little risk. Okay. Because you were selling a $30 spread for $26. You had $4 of risk, not the end of the world. Okay. And what you really created was a synthetic call that instead of having unlimited potential profit, at a limited profit of $26, which ain't bad. Okay. All right. Let me go back to this for a minute. I'm going back and forth. I'm confusing myself. The trend, the stock has gone up, but the more it seems likely to go up, keep going up. But the instinctive belief is flatly contradicted by fundamental law of financial physics. The bigger they get, the slower they grow. And again, this is when you're trading the trend, right? We predominantly try to trade the trend, and all of our long-term stuff is basically trend trade. Okay. And again, too many people want to say, well, it's going up, it's got to go down. Well, it doesn't have to go down yet. There are certain indications, if you understand the phase of the market, when it may pull back. But how long can a trend last? Anybody got a view on that? How long can a trend last? Until it doesn't. That's right. Okay. Up or down. The trend will go until it doesn't go any longer. That's it. It's that simple. Okay. Don't fight it. Listen, those who think they're smarter than the market always end up in a crap. Okay. I deal with this in every field, from hedging with farming to everywhere else. Everything they can pick the top or the bottom. Okay. And I say, that's hell if I know. Okay. I mean, you know, I do radio sometimes I would do every Wednesday for Market Rally, and I go, I'm conflicted. I love the grains here, but I'm short. I'm short corn and wheat right now. Corn and wheat, but I'd love to be long them. But I'm not going to fight it. Okay. I think they're going a lot higher. But again, the trend is a trend. You know, when crude oil got the $30, if you remember that was, let's see, the $30 crude oil this time. I'm talking about way back when. I'm going to give you the time. Hold on. I was going to Indianapolis. Was 2005 was when crude oil started to move, or 2004, right around there. That's when we had what we got now, right? We used to be at $9, $10 all the time. It was a dead product. All of a sudden, it became something. Okay, and it got to 20. And, oh, we got to sell it. I said, why you got to sell it? It could go to 30. It can go, keep going. There's no reason to think that you have to sell anything. Okay. So again, don't try to pick the top or the bottom. The market will indicate when is the right time. Okay. You're not always going to be right, but at least you'll have a high probability reason to do so. Now it comes down to study and planning. Look, success is a sum total of your efforts. Okay. You know, nobody has a lucky trading career. Okay. You have lucky days. You can have lucky trades. Okay, but where the luckiest traders are? You know the luckiest traders are the ones who are prepared the most. Okay, you got to study. To invest successfully over a lifetime does not require a stratospheric IQ. In fact, I would argue with you that the higher the IQ, the harder it is to teach them to understand that the fundamentals don't mean jack during a trading cycle. Okay, that nobody cares about the fundamentals during a trading cycle. Okay. It's like a guy I used to bet with. He had a PhD from Northwestern, pretty smart guy, right? And he could never understand the betting line and why it was, and why he kept losing betting, because he was trying to use book knowledge against what facts were, what the market was telling him. Anyways, you got to make decisions without emotion. I talk about all the even keel. Okay, we're an even keel world. The more you get pushed to one side or the other, either over exuberance or depression, you're only hurting yourself, okay? Because over exuberance will cause you to be sloppy and you'll screw something up, and I guarantee it, okay? Because it comes down to risk. It's risk control. The whole business is designed around risk, okay? If you don't handle the risk, then you're creating a problem for yourself, because you're going to run out of money, okay? Money's a valuable commodity, not as valuable as time, especially now, but obviously the most valuable commodity, which is one you cannot add, is time. Okay. So now the things you can control, you should. And money is a big control. And if you're investing your money, doesn't it make sense to control it to the best of your ability? Okay, either through hedging or doing something that is at least not gambling. Okay. Have to hedge the risk. Oh, you can hedge the risk on anything if you want to, if you really want to. Okay. And if you're in things that are unhedgeable, you probably shouldn't be in them. Unless, again, there's private equity deals, there's all kinds of things, but again, basically. Okay, let's go back here. Okay. Please review how you come to the prices you recommend for the rolls on the double diagonals. Actually, they're weighted double diagonals, and I will do that right now. Okay, so when you're doing a weighted double diagonal, we do a lot of weighted double diagonals on the Saturday options call. And why? Because they're neutral to the market when you put them on. You get to collect premium on a weekly basis. And if the market makes a big move in one direction or the other, you're going to make money. Okay. It's a great trade. I mean, but not without risk. Again, every trade, anything you put risk, anything you can make money on, there's going to be some risk. But we do know one thing, in fact, to a weighted double diagonal, which is the declining risk each and every week, or depending on what product it is, each and every other day, right? In the SPYs, the risk gets reduced every other day, but there's still risk until you've capitalized on all it. But the way that I do it, okay, like we have a position. I mean, I want to find one that's kind of in the center right now, because it just makes it easier to explain instead of trying to go one that's kind of out of balance right now. Okay, so give me 1 second here. Let me just get one that is open right now, and one that is going to give us the cleanest read to your question. Okay, so right now, okay, we have a position in Roku. Okay, in Roku. So it's a little bit skewed to one side, but it's okay. So we're short. Actually, first let me just set up this position and I'll explain it. So I'm going to sell a double calendar. Okay, so we're short the 87 put, and we're short the 90. This should be the 103 call. Okay, so I'm going to set this up. So I want to buy back the January 10th 87 put, and I want to buy back the 103 call. Okay, and then I want to do this. I'm going to resell the same, okay, for the following week, which is the 17th, because that's how we have it set up for. Okay, and so that right now is a 253 credit. Okay, now I know that if Roku rallies a little bit, that credit can probably get out as much as $3.5. So what I'll do on Monday is, I know that, and how do I know? Well, it's hard for you to understand how I know, but let's just simulate it. Okay, so if I make the equidistant point on this stock, okay, around 87, so we're $16 wide. So if I change this to 95, and 79, okay, so 95 and 79, okay, and then this would be 9. Oh, I'm sure there's no price that I need it now. When I need something, of course, it's not there. Is it 95? I'll fix it when I get back. So just give me a second just to get this set up. And 79. Okay, and of course, there's no valid option class. Okay, so which one I got to change? 80. Yeah. Okay. So this is a little bit skewed. Okay. I'm going to skew a little bit just because I'm not going to. So it's around $3, which is what I said. Okay. So a little bit of a rally would bring that to $3. So what I do is I'd set it to $3 first, but be willing to move. But I know that 3 is about the max I'm going to get for that roll, 300. Okay. So I would set it there, and that's all I'm using is what's in front of me, knowing that the options that I'm short that expire this week are going to lose value faster than the options I'm going to sell. But at some point, the law of diminishing returns will come in, and I have to make the decision. So I need to have a benchmark price to start with. Okay. I wish I'd hedged from the start. I wish your hedging software was available earlier. Thank you, sir. I appreciate it. Okay. When I was talking about smart people, you know I was talking about you, did I? Did you? Anyways. So again, it's knowing what the expectations are, where is the roll's at, and understanding the value of your options. Okay, so we know that Roku, for example, can be very wild. It's got a very high implied volatility, so it can fly. So I can be a little bit less in a hurry, but I have to watch the declining value of the ones I'm going to sell. I know I'm rebuying the ones which I'm going to buy back, which are ones expiring this week. Now I'm going to sell the ones for next week. So I have to make sure that I get the max value. Now, obviously, max, we don't ever know that we're going to get exactly, but we have to have a bench line and a price mark, okay, which that's how you figure it out. Just you kind of put it together and figure out the price. Okay. Do you use stops with day trading? We use stops, but not like anything else. There's stops based on the algorithm, and they're based on the day, and plus the fact that in Day Trader's Dream, we have to be out of the market by the pit close, or obviously there is no more pits, but by what used to be the original pit hours. That's what Day Trader's Dream trades. It trades the original pit hours of the market, which means that if we're in the currencies, we have to be out by 3 Eastern. If we're in gold, we have to be out by 1:30 Eastern, crude 2:30 Eastern, equities 4 o'clock Eastern. We're out no matter what, but we use a stop based on the algorithm. Now, I know this is about a 12-part question, like back to school, so I'm going to come back to this from, and I'll be back there in a minute. Okay. Be prepared. Again, in today's fast-changing world, it's not so much what you know anymore that counts, because often what you know is old. It's how fast you learn. Okay, think about that. You know, when I first started in 1980, okay, there was a little bit of information out there. Okay, my Saturday call, Sam. There was information that you could gather. There was some inside information back then. If you remember, you know, Ivan Boesky, Michael Milken, the whole Wall Street movie, if you ever saw it, that was about inside information. There was, but there is none anymore. Okay, why? Because nobody can keep a secret. Okay, and technology, it flows too fast. Okay, so what you're looking at is you have to learn. And again, what you have to learn is from your mistakes you're making. We're all going to make mistakes, but learn about the price action of the market and learn to give yourself the highest probability chance to win. Okay. Playing probability is not gambling. And look, you know, again, many think that they're playing in a casino. You know, I used to trade with a guy. You said, "I'll take one more marker." I go, "What are you, out of your mind? You have an edge here. You're the casino." Okay. You're not gambling if you're taking the high probability side. Okay. So if you're hedged, you're already in high probability. Okay. If you're using our models, even though they went through drawdowns, like, yeah, look at, I don't hide from anything. Okay. I always tell the truth. I'll tell you what we did. And we had a bad year last year. But at the end of the day, okay, we know that if we're playing the probability, we're going to get paid, and we're going to get paid in spades. Oh, ace, king of spades. We're going to get paid in spades when the time is right. Okay. And many of us have already been paid back. Okay. Because it's done exactly what we thought it was going to do. Okay. Now, not all models, but again, I can't make, I can't control everything, but 350 for sure. But my point is that no matter what, you have to keep putting the probability in your favor. You know, insurance companies, when they insure somebody, you know, just because the guy they insured yesterday and they gave him a cheap insurance rate because he was supposed to live for another 40 years, he dropped dead, doesn't mean they changed their model. They keep the same model going because they know the law of large numbers and the probability over time always works. That's the same thing here. Probability over time always works, which just comes back to you and your discipline and money management. You can be a highly educated, successful, and financially illiterate, which is most of our country. Okay, most of our country is financially illiterate. That was the whole basis of when I put the high school program together. I couldn't stand it anymore. Okay, it is impossible to deal with people that have no clue. Okay, that refuse to understand and learn how the markets actually work. Too many sit there. You know, when the markets are going straight up, every advisor is a genius. Okay. And the minute they crack, there'll be a scramble for a new advisor, for the next genius. When the fact is, if you'd be somewhat literate about markets and how they work, you would understand that it's not that easy. And then you would understand better how to pick an advisor. And not to tout my son's horn, but my own son's an advisor, and he does it right. Okay. He tells people exactly what he thinks about the market at the time, doesn't try to get them in. If he doesn't believe the conditions are favorable, but does tell them and believes that the constant ability to invest at all times is important. But understand it and be prepared for it. Don't get shocked by it. There's no geniuses out there. Okay. There's no special talent. Okay. Our hedging model is a special talent. Okay. You got to have a plan. This is where people really start to fail. And again, there's drop-offs at every level, but you got to have a plan. Okay. And again, if you're trading and you're investing, that's 2 plans. If you're trading, investing, and trading in a shorter-term time frame, that's 3 plans. Anything that you're doing that varies from something else needs to have a plan around it. It doesn't have to be complicated. It doesn't have to be a dossier, but it needs to be a plan. Okay. You have to know what you're doing. Like we know in our models on the option model, 80-50 delta roll, that's automatic. That's programmed into the software that does it, that for those who use the automation. And we know in the equity portfolios, we only roll the long option, whether it be the put or the call. We don't touch the spread. Versus in the hedging model, okay, we roll the put or the call up or down because we're taking money on both sides. Okay, because that's a constant model. Okay. So again, but the plan, you have to know that before you know that. You have to be prepared for that before. You got to know everything you're going to do before you're going to do it. Okay. The philosophy of the rich and the poor is the rich invest their money, spend what's left, the poor spend their money, invest what's left. And ain't that the truth? Okay. But you got to look, this is not my plan, but this is just, again, you have to have everything that you do has to be planned out. And again, it doesn't have to be majorly complicated, but you have to know if I'm trading on 4 minutes, I know exactly what I'm doing even before I put a trade in. I know how much the stop is going to be. Okay, I know where it's going to, where my first move of my stop is going to be, and then I know how I'm going to play it from there. And I already know all that before I ever even put on a trade. Okay, my hedging is automatic, 3% down, 5% up, automatic on the stuff I trade. Okay, I don't have to think about it. Again, it's all planned. My double diagonals, all planned. Everything I do is, even though I'm scattered, is planned. Okay, and that's what you have to remember. And what you have to try to do is to be planned for everything. Okay, not to be out there and guessing. Everything should be based on exactly market action that's happening. Okay, okay. Let's go back here. Thanks for the chance to retest my knowledge on the following questions. This is like back to school. I have one question and 37 parts. Okay. I'm a little probably want to brush up on others. Okay. I have XLV weekly 1/2 back ratio and a June 10th 130.5 call. And okay, so I have a synthetic on. Okay. If price rallies, I roll the call up when the 80-50 delta. If it drops, I do likewise. And yeah, that's correct. Okay. Now XLV is would not be exactly one of my choices, but hey, it's all good. Okay. Yeah. You roll the same thing. We just went through it. The same premise applies. Okay. If it goes up, you roll it up, and if it goes down, you roll down because you're protected anyways. On the quarterly hedges, some stocks have strikes that are 5 or 10 apart. Rather than do the short strike at the money, do you place the strikes higher to better straddle? Yes, we put them higher. Remember, we've talked about putting one in, one out of the money. Okay. But also remember that, just because they're 5 wide, it's not always to your detriment. We always look for the negative when it's not always negative. When you're looking to be negative, then you're going to find negative things. But, if the markets are going in your favor, then it's to your advantage to have the wider spreads because you're getting you're paying less. Okay. So again, don't get confused or put off on what's happening, because just because it's a $5 spread this week or a $10, whatever it is, it doesn't mean it has to be against you. It could be to your favor. Okay. It could be to your benefit. On your manual trades, given that you have many trades going through the day and week, and you have the multitude of trade positions in one product, the Q, how do you keep straight which legs belong, which trades? Is there a trade journal software checking a position and profit that you'd like to use? No, I keep track because I keep them in separate accounts. I mean, it's that simple. You don't mix. If you go back to the beginning of this, you don't mix your speculative and your hedging in one account. You don't mix them together. They need to be in separate accounts or sub accounts that can be tracked by themselves. Plus the fact that you don't ever want them to run into each other. Should there be something? Should there be an issue? Okay. Again, you don't want to have strikes running over themselves. Okay, so they need to be in a different account. Okay. So I keep a journal on my pencil. I'm still working on trading cards. I'm about 30 years behind the times. I hate everything else. Okay. If you have a double diagonal earnings trade and the pre-market spikes higher, how you calculate your target to sell 50 to 100 shares. Well, I don't have to calculate the target, but you just figure out what your costs are and where you start making profit. Okay. And, again, I can't simulate it now, but you figure out where the profit comes in. And that's pretty easy to do. I mean, it's your debit minus the spread, gives you the profit target. And if the stock gets above that or below that, depending on which side, you either buy or sell the stock in the post market, okay, or pre-market. Okay. And that locks in a profit because that's how you trade options in a pre or post market, by using the stock. But there's not, again, it just depends on where the number is defined ahead of time. If your stock's trading at 200, okay, and your debit was $5, your spread was 5, so 210 is where you start making money. So 215, 212, you might want to start selling a little bit, like a half of an option, take some profit off the table. Whew. If I have a $50,000 in my account and want to stay, how many risk reversals of this buy could I have to not be over leveraged 3 to 1 or 4 to 1? Well, I mean, if you figure out without the hedging, the raw leverage on SPY is 40,000, 41,000, right? So if you want to be leveraged at 2 to 1, you could do 2.5 times basically. Now, because you're hedged, you can do 3 at 50,000. You could do 4 probably. But the real point is the over leverage is not like I'm leveraged at 10 to 1, okay, because I understand it and I'm not worried about it, okay. But I'm not, if I have to add money, it's not going to bother me either. See, the reason that I always encourage you to start at a much lower valuation of leverage, because you have to learn what can happen, because when you're leveraging, remember, you're not it's not the amount of options dollars you're investing in. When you're leveraging, if you're leveraging 300 shares of the spiders, you're leveraging $123,000. Okay, it's not the cost of your options. Your risk comes on the 123,000 to the maximum amount of those price of those options. Okay, so that's what you have to keep in mind. So again, when you're making money, it's unbelievable, but the minute you start losing, it becomes a little hairy. That's what you have to understand. Okay, you can have multiple accounts with one. Yeah, I did say that, by the way, earlier. But yes, thank you, Tom. It's good to have you here. In your day traders program, once I saw 7,000 profit intraday, but finally it was 3.5. Extremely happy with it. Don't you have profits based on trading? No. Again, you did not listen. Okay, this is again the problem that I have. I have explained this on numerous occasions. There is no final score until the end of the day in those accounts, because the executions have not been done yet. The distribution of the day traders dream trades are not done until they're closed. Okay, so you did not have that much of a profit in one day. You didn't have anything because it wasn't real until everybody gets their distribution. Okay, it's just parked there as part of a trade. I keep telling you that, but for some reason you don't want to listen. Okay, which frustrates the crap out of me. Okay, Trader allows, I don't know if they allow sub accounts, but you can open more than one account with them. You have to ask them. Okay. Saturday trade, Sam. Okay. Okay. To calculate max credit for when to do Saturday rolls, all right, we did that already, right? I don't know if we do that. Okay. Again, it's just looking at it and getting what the credit is now. Obviously, that can change, right? Volatility can change, but you just need a benchmark to get that number. Okay. And that's what you're trying to do. You're trying to get that. You're trying to get to that number. Again, you're never going to be 100% correct. Okay. It's not a question of being 100% correct. You're here, sir. Did my earlier answer this question so I don't have to go through it again? I know you're here. I just looked. So let me know yes or no, so I can, because I don't, again, it's obvious I don't want to keep everybody all day. And if I already did it, I don't want to waste time. Anyways, when I did Fridays next week, Iron Condor for the SPY price 411.5 with the expected move of 10.5, I noticed I could go out 1 to 2 more strikes and the spread is stuck at 40 cents and 2 strikes wide compared with the put side. Does that mean the expectation was to move? No, it just means that sometimes the way they fall in price, and sometimes there's a skew in premium to one side or the other. That's all. Not a big deal. Okay. On the morning futures trading, if the blow-off trade becomes difficult and fails to move, how long do you like to wait before? I like to wait right now about a couple of minutes. I'm not interested. We're not very busy, so it makes it more frustrating. And the longer it sits there, the more that really increases my potential risk. So I'm much more anxious to move quicker than not. Okay. I'm more anxious to move at a faster pace based on that right now. Okay. But again, there's really no right or wrong answer there, but certainly, the objective is if it doesn't trigger what we're looking for right away, we want to try to make sure that we capitalize and make money. And the way that we do that is to change it to a straight up trade after that. Okay. Let's see. Can you discuss again the weekly iron condor when our resistance? Well, you're talking about the phases of the market. Okay. And that would be, for example, which I did. So the spiders, okay, are at resistance. And now, again, we're long them, but I mean, again, that's a different account and I don't really care, but we're at resistance. And I did sell extra call spreads for this week, assuming a retrace back down. Now, I may be wrong. Look, it doesn't matter to me, right or wrong. Why? Because if it goes straight up and I'm wrong, okay, my stock will cover up the position and it won't hurt me. And if it goes straight down, my puts will cover up. So again, but most of the time I'm going to collect. I mean, this is going to collect 65% of the time. And if we're getting 35%, if we're getting 40% credit on a 65% favorite, now we had more in, then it's probably a pretty good do. Okay, but you're just trading at support and resistance. If you're at resistance, when it's time to do it, you can sell extra call spreads. Remember, you're protected by your long stock or your long hedge anyways. Okay. Okay. You got this one. Let's go to back to this for a minute. We're dancing. I'm dancing today. Okay. Your mind is your greatest asset. Look, if you cling to the past, just expect more failure. What did Albert Einstein say, right? To doing the same thing over again, the definition of insanity. If you're going to continue to make the same errors and the same mistakes, which most do, then who are you kidding? You're kidding nobody. Okay, you're putting yourself in a position that you can only lose. Is that the position that you truly want to be in? Again, you've already proved to yourself that you know how to lose. Do you want to continue to know how to lose, or would you like to try to find a way to learn how to win? Okay. Again, this is something that's important, not for me. I've been doing this for 44 years. I understand it. I want you to understand it. Okay. If you're not making money, okay, on your own and doing things, you have to figure out why, which goes back to your trading plan, which goes back to almost everything we talked about so far. But you need to exercise those demons out of your mind first. Again, this is just, big nothing about markets. But again, market manipulation, look, I don't care. I've had this conversation thousands of times. And maybe the markets could be manipulated, but they can't truly be manipulated because it takes a buyer and a seller. Okay. There is no more insider trading. It doesn't look, that stuff happens in the middle of the night in the dark markets, dark pools, has nothing to do with you and me. Okay. The brokerage, look, none of this is part of it anymore because everything is so fast and automatic now. Okay. But the manipulation part is the thing that gets to me because it still takes price discovery. You can't make a market move far until you get rid of all the either buyers or sellers, whatever you're trying to do on the opposite side. Okay. Oh, what's up, Linda? Which of your programs covers double I Saturday. Trading is a skill. Okay. It's not luck. Okay. You get lucky if you're prepared to get lucky. But the skill of trading is a skill that you must learn. Okay. You must keep it in tow. Okay. Because again, it's preparation to win. Okay, knowing that you're not going to win every time. And again, I will use the same example I always use. Games of chance and there's games of skill. The games of skill that I play, poker, bridge, backgammon, and gin. No. Poker, backgammon, or gin, I'll play for any amount you want to play for. Bridge, I won't play for anything because I'm not very good. But in the other games, I have an edge. And that's a mathematical edge, okay, which is determined by understanding how the market works and putting everything together in a high probability position. But are you willing to take the time to learn the skill? Okay. Golf too, but I don't play. I stink in golf now. I used to be good. I used to be very good. Now I stink. The last time I played, when I quit, I was a 20 handicap from an 11. But anyways, again, this is a skill game. Okay. You can learn the skill. You don't have to be a genius. You have to be disciplined. You have to be willing to learn the skill. Okay. And of course, our Day Trader's Dream product, which is done with CTG, they have to do the execution. They're phenomenal people. I listen, if I talk about somebody, if I recommend something, that means that I'm already a customer myself. Okay. That I've already vetted them. Okay. I have other brokers. I got Schwab. I hate them. Okay. I had to change an address. It took me 3 days to get a hold of somebody so I could change the address. I got Thinkorswim. I got many brokers to come. I hate them all. I love CTG. I love Trader. Okay. Why? Because they're cooperative people, because they understand the bigger picture. They're not just out for my money. Okay. And that's, I think, one of the things you have to remember. But, Nell and Pat are great, but they have to be involved if you're in the Day Trader's Dream. We got auto trading available through Trader at $10 a month, for our programs. And, it's no charge for the membership in equity portfolios and hedging. You pay a fee. But again, you took a class to hedge. And of course, soon, and I know Tom's here and I'm not going to put him on the spot, but we ran into a couple of snags, but at some point we will be worldwide with auto trading, and whatever that is, he'll let me know. Until then, I'm not going to say when, but we will be worldwide auto trading. Okay. Every model. Okay. So that you can all participate, because I know I've got many Canadians, and again, I got people all over the world. Okay. And I want to make sure that we get them. Okay. Let me just get back and go a couple more questions. Okay, where was it? 12. Wait, what did I do here? Oh, there it is. Okay, dreamers. I understand returns are different between the mini and the micro portfolio due to start times, but when I look at the chart you send in the email, the equity chart, it seems the micros have less volatility and more upside. No, that's not true. They're trading the same exact product. Okay, the difference is that the regular is trading 2 micros, and the aggressive is trading 1 mini. Okay, so it's trading 5 times the size. You can't make any more than you can make in the aggressive. They're trading the exact same signal, the exact same thing. The only difference is the size of the trade. Okay, so you're obviously either looking at something wrong, okay, or don't understand something. But it's all about risk. Okay, and if I trade the aggressive. Okay, but not everybody wants to take that. Not everybody wants to take a hit. So again, look, but they cannot be that varied, which is, if you looked at the actual results, the aggressive is about 7.5 times bigger. Why? Because originally it started with 1 contract, then we went to 2 because we realized that 20,000 was an overspend. So we made it fit. Okay. When holding an underlying and hedge to itself, I understand the reason for buying more as profits are made on extra puts. But how do I assess if the underlying is worth holding when it declines 70%, maybe never recovers, like Square in my IRA? Again, that's the decision you have to make. If you're in mind, you've obviously accumulated a lot of shares on the way down. Okay, you've made a lot of. Now you haven't made a lot of money. You've got a much bigger position on the way down. Okay, the question you have to ask yourself is have they fundamentally changed, or just a market meltdown in part of the bigger tech wreck that we've seen in many? Many of those have melted down. I mean, Zoom from 500 to 700, Roku from 500 to 70. So we've seen this pretty much, throughout the entire tech industry. Now, are they fundamentally changed? Or, because we knew that those are more speculative stocks to begin with. Okay. And I'm not saying to hold it. I'm saying that you have to evaluate the amount of capital that you have tied up in it versus the perspective of when this is going to recover. Personally, Block, I believe it's a real company. I think they're going to do well. However, they can go back to 30 first and go to 20 before it goes up again. So it has to be based on and weighted on your personal capital, where you are in life. Okay. Because maybe the Square was too risky for you to begin with based on your age. and what you're doing with it. Okay. Like I have one portfolio that just has the spiders, the Qs, and the diamonds. I mean, spiders, Qs, and IWM. Okay. So, again, when you get into more speculative stocks, they have a tendency to swing a lot further, both back and forth. They're great, just like leverage. They're great when they're going in your favor, but when they go the other way, you have to make the decision: is it worth the risk that I'm taking? Now, I own Square, okay, but is it worth the risk? And that has to be something that you have to evaluate, based on your portfolio, your age and your comfortability. Okay, so the only time that I liquidate a holding, okay, is if the fundamentals have changed. In other words, when I'm buying a stock, I'm looking at it from a long-term view that I want to be in business, years from now. Okay. So, I'm not a big fan of very speculative investments there. So, but if something changes, and again, I'll go back to the example I use often, GE, their company changed. It no longer was the safe stock because they were a piece of crap. So that would have come out of my portfolio. I didn't own it, but that would have come out because, again, there was no chance that they're going to be that probably be in business. That's just my opinion. Okay. And then I'm a member of Day Trader's Dream. I couldn't be happier with my decision to join your team. Well, welcome. My question seems bizarre. Yeah. When do I die? Okay. My question seems a little bizarre, but I'm wondering, Bubba Trading would continue auto trading the event and the death of the company CEO. You mean in case of my death? Yes. There's a plan in place that Bubba Trading will continue on, even without me. Okay. There is others that are well versed in what we do. Okay. And they will carry on in my stead. Okay. Should I have meet my unfortunate demise? No, it's not awkward. I don't care. I talk about it all the time. When you pose the micro, not the aggressive, the amount per contract result per two count, it's the total result, I believe. Honestly, I'll find out for you. I don't know the exact answer. I never really pay attention. They send it to me. I post it. I will find out for you. But how does it match up to your account? That would be the best way to say it, to look. Okay. I don't think so. You never know. Tomorrow is promised to no one. But I'm pretty healthy. Work out every day. Quit drinking Pepsi. Okay. So I'm in the prime. Anyway, let me get back to this. After that morbid question, no, I'm just kidding. It doesn't offend me at all. Again, invest in yourself. Look, you guys have all spent fortunes buying other crap from other places around the globe. Okay. Invest in yourself. It's time for you to invest in you. And again, I'm not selling you anything. I don't care. But the things I've taught you so far today, okay, again, you got to invest in yourself by educating yourself. Whether you become a member of mine or not, I don't care. I want happy members. I'll tell you that. Okay. If you're going to be unhappy, don't come here. Okay. But again, whether you're going to be a member or not, everything I taught you up to this point is for your benefit, to teach you to be better at what you do. Quit chasing the crap. It's crap. That's what it is. There's no such thing as turning $300 into $300,000. It does not happen. Okay. Maybe once in 5 billion years. You got a greater chance of that, of a lot of things that happen. It doesn't happen. Okay. Look, they're marketing schemes. They're picking on the poor and the desperate. Okay. And if you're falling for them and you're not, then you're making a mistake. Okay. The best results too are weekly. Those are exact when I send it on Saturday. Okay. The ones I sent today. Okay. My buddy, what's up? How's your wife, my man? Betsy, how's Betsy doing? Is she okay? Okay. But again, my point is that you gotta quit chasing the shiny objects, the bullshit dreams that don't exist. Okay. Because they don't exist. All right? There is no magic. Okay. 44 years I've been doing this myself, my own money for 44 years. Okay. There is no magic. Okay. Yeah. Chocolate is taking 50. I know. Okay. Quit chasing this shit. That's the bottom line. Okay. Now we got hedging. We got a new class starting on Tuesday. Okay. If you want in, okay, I'll give you the same deal I gave when I made the original pitch. Okay. 3,000 and you get a year's free of Day Trader's Dream. Okay, if you don't want to, again, no big deal. If you saw the presentation, you want it. If you didn't see it, and you want to see it. But the new class and the last class of this year starts on Tuesday. Okay, in fact, it may be the last class ever. I haven't decided yet. All right, but of course, you who are lifetime members will always get a quarterly recap as long as I'm alive. Okay, but it may not be the full class as it is today. You should be hedged. Listen, the investor presents himself to be stampeded or unduly worried by unjustified market declines in his holdings is perversely transforming his basic advantage into a basic disadvantage. And is that not the fact or what? Okay. Again, you turn yourself into your own enemy. This goes back to the person inside, right? The enemy within. You got to beat that guy or gal. Anyways, we got the Day Trader's Dream, which is doing phenomenal. Again, if you haven't seen it, it's up. The regular is up 10% since December 3rd. The aggressive's up 73%, whatever numbers, something like that. Okay. And the equity portfolio management, great programs. There's 6 different portfolios. You know, we had a bad year last year. Look, again, you can see it for yourself. I send out the full results every Saturday. You get the futures portfolio. Okay. I got them all. Okay. And everything you got in live, if you want to trade live with me every morning. Okay. That's a treat. You get to hear me badger you for an hour. Okay. No, but in all seriousness, I mean, and I trade with everybody in the morning if you want. And of course, every day you get an update if you choose. Okay. I do an update every day. And tomorrow I'll do a 30-minute full podcast where throwing some of my own personal views as well. But you can have any of the products you just saw, except for the hedging, for either $1,000 annual or $99 a month, BubbaTrading.com/summer. Up to you. Again, if you're going to be happy and join us, great. If not, don't worry, no worries. I'm happy to teach and happy to answer questions, and I will take any other questions you have now. Okay, if you have any, feel free to fire them in. I'm here to answer. And if not, if I did a good enough job and complete, then I'll kiss you all goodbye and tell you have a great day. Okay, but I will give you a couple seconds. I know you're a little bit delayed behind me. You're welcome. Listen, again, I want you to learn. I'm trying to educate everybody. I want people to have a better understanding of the markets, whether they're members or not. I want you to have a better understanding. It's for you. It's for yourself. Okay. You have to call me on that, sir, or email me. Bubba's growth and training have changed my life. Now I go anywhere from work. That's true. That's true. Okay. But again, I just want you to be prepared. Again, whether you remember or not, it's not going to determine the rates I charge. Nobody charges as little as I charge to do this. And basically I charge for because I have to subsidize my high school program, which, you know, other than the few people that help me on Patreon, I pay for myself. Okay. So again, I'm just trying to educate. Just keep listening. Look, it takes time. Oh, yeah, Bubba Palooza at the Circa Hotel. Thanks, Captain. Yeah, Bubba Palooza will be at the Circa Hotel in December in Vegas. There'll be an invitation going out in the next few days. Yeah, it will be December 5th at the Circa. Okay. Futures portfolio management. It's just one of the portfolio. It's like the equity portfolios. It's a group of futures depending on how much you want to put into your account. I mean, you manage it, or CTG, I'll let her direction trade it for you. It's your money, you're in control, and you can either trade it yourself or have them do it for you. Okay, but there's different futures and so on. Where on the website is Day Trader's Dream? It's probably not on there yet. You know, I'm pretty private. Okay, you know, I'm truthfully, it's probably in the paywall, but I'm pretty private about everything. I don't publish a lot of stuff because I know more than most. Okay. You've been in it before, Sam. This is my buddy Sam from the East, right? Your wife is Betsy. Am I talking to the right guy, or am I making a mistake? This is Knucklehead? That's what I want to know. Oh, okay, wrong guy. Oh, Sam Basker. Okay, gotcha. Sorry. Oh, I didn't mean to mention your last name. Sorry, you're the wrong guy. I got another Sam on the other side of the world. Anyways, one is holding positions for an extended period of time, and one is, you know, out by the end of the day, no overnight risk. Okay, so that's up to you. Again, that's yep. Oh, you didn't listen to me again. Another guy doesn't listen to me. I told you I had a block, big boy. What part of the Bay are you, big boy, sir? Fremont. Oh, I know Fremont. Yeah, I've spent a lot of time out there. I won't go back, but I spent a lot of time out there. Anyways, all right. Looks like we have no more questions. I thank you all for your time. I hope you learned something. I hope it helped you out. And I hope you, again, please take what I tell you is ways to help you. It has nothing to do with me. Would adding pit hours and commodities to communications traded in DTD cut down on what would adding pit hours on and commodities to communications? I don't understand the question, friend. Honest, I'm kind of confused. Maybe if you could rephrase it for me. I'm mixed up. You're welcome. My pleasure. Again, I'm always like to help. But I'm going to wait. Dwight, I'm going to wait for you to I'm confused with what you're asking me. Okay, so rephrase it for me so I can understand it, because I don't understand the way you asked it. Would adding pit hours and commodities to communications? That's right. You want me to tell you what they are? Oh, I can do that. I mean, it is published when you bought it, but yeah, I can put that out. Okay. Yeah, that's good idea. Send me an email. Will you remind me? Because I'll forget when I hang up. Will you do me that? I will do it if you remind me. Okay. I promise. What's up there, Bruce? Good. Okay. Is that good? Greg, you get everything you needed? Okay. Again, obviously the professor asked me one question, 32 parts, but no, just kidding. Okay. Again, I don't mind. You know me. I've known you for how many years have I talked to? Yeah. Okay. Most of you know me for years and years and years. Okay. So anyways, we have a chat room as well for members, and my chat room is not like none others. It's very positive. And, even through rough periods, we don't dwell, we move on. So in the meantime, everybody have a great weekend. Enjoy, and thank you for your time. And I will send out the recordings of these. So if you want to review, feel free to do so. In the meantime, if you're interested in hedging, class starts on Tuesday. And if not, adios, everybody. Thank you so much. Have a great weekend, and we'll see you later.